Hey, everybody, welcome back to our weekly or mostly weekly mortgage market update. You know, we missed last week, and that's my fault. I was planning on Christopher was going to cover for me with Hammer, and I was driving down the freeway, and my transmission just went out in my truck, like
Isn't that
fluid
a
everywhere, and I kind
fairly
of got
new truck
stuck.
too? Isn't that a fairly new
No,
truck?
no, this is my old
No.
truck. This is my
Okay.
'03 GMC Sierra Denali, so it's okay. Like I didn't crash, but that's why we didn't have a call last week. So happy to be back this week. Hammer, how you doing, man?
Good, good. Thank you for having me. Hello, everybody. Hopefully, they missed us a little bit last week.
Nobody said anything, but I hope so. I hope so too.
It's nice to be needed.
It
It's
was
nice to
quiet.
feel needed. That's all right. So
I know.
if you guys
Yeah.
do miss us, if you want us to know that you guys are watching, do us a favor. I know that many of you won't watch us live. Yeah, you're probably busy during the day. But if you do want to know what's going on with rates and pricing with the mortgage world, what's going on over the next few months, what do we think is going to happen and why, and you want to get educated, let us know that you do tune in. Go ahead and give us hashtag replay, just hashtag replay in the comments. Ask any questions that you guys have. We'll be glad to answer them. And as deep as you take it is as deep as we'll go. So if you want to know more about any of the topics we talk about, we'll go deep on you. So just tell us. And someone said I did. They said I guess this Facebook user. I can't tell who it is, but someone missed us. So thank you
Oh,
for
good. All
chiming
right.
in and telling us you missed us. I appreciate
I
that.
know. I love
So
that.
you ready? You want me to should we go this week? Let's talk about what's going on.
Yeah, you know, was it just me or does it feel a little bit quiet this week?
I think it's just you. I'm getting ready for
Okay,
vacation
good.
next week, so my life is hectic like crazy. And
Right.
monitoring the markets. There's a few different things going on. What may seem
Okay.
quiet, though, watch how I pull this in. I take this in
All
me.
right.
What
Good.
may seem quiet is that there are no Fed speakers this week, and everyone's like, okay, that didn't really, why do we care? Well, actually, the Fed speakers, the members of the Fed, a lot of the governors and the different Fed presidents, they all speak at all different events, and what they say influences your mortgage rates greatly. In fact, when they make little comments about what's going to happen, they kind of lay out these breadcrumbs, a little Hansel and Gretel trail, if you will. And
Yep.
the Fed's goal is to not shake up the markets. They want everybody to know what's coming. So we have a Fed meeting next week. It's called the FOMC meeting. That stands for Federal Open Market Committee. That's the meeting where the Fed members get together, and there are certain members which rotate. Some are fixed, some rotate. It's some cool stuff if you Google it. They will be voting on what will happen with the Fed funds rate and policy
Hmm.
rates. Now, that means that next week there's going to be a rate increase. And we know that because these Fed members have already made it very clear. They've already laid out all the groundwork and they've laid out all the breadcrumbs. They want the markets to know what's coming rather than be shocked by what's coming and have big moves and volatility. So the Fed members, they go out and they kind of talk about this stuff, and they've basically said we're going to have a 0.5% rate increase next week. So you're going to see articles on Bloomberg and CNBC and Reuters and
Yep.
USA Today, and it's going to say the Fed raises rates a 0.5%, and everyone's going to be like, "Oh my goodness, mortgage rates, my rates gone up." What? But they don't go up. And I'm going to tell you why in a moment. So bookmark that. But the Fed speakers are not speaking this week. That's what I started with. And the reason why is it's actually about 10 days before the Saturday. It's funny how they pick a Saturday.
Huh.
The Saturday before the meeting. So it's 2 Saturdays before the meeting. The Fed
Okay.
members go on blackout, and they don't come out and publicly make any comments. They're not allowed to talk about anything economy related. They don't talk at all. Right. So
Okay.
I guess it's just to stop any last minute shakeups and to stop anything that maybe be done. But it's a time honored tradition. It's what they do. I think it's a regulation that they actually have, and so that's why it's quiet this week, Nathan, is
Okay.
because you
Okay.
don't hear the Fed members. How's
You
that?
know,
Anyone buying
it's
it?
no, I love it. Actually, I do buy that. Oddly, last week when I was heading to the airport to go to a conference. We were talking about some mortgage stuff, and actually one of the representatives from the Atlanta Fed was there, and they were talking about affordability. They're talking about the pressure on home prices, and I thought that was pretty cool. But has little to do with rates, but it's something I want to pin and tag for the end of our conversation today. So I just want to
Was
drop that in there.
did you actually see Raphael Bostic from the Atlanta Fed? He's the Atlanta Fed president.
No, and I was going to grab my note. had, but it's in my backpack way over there.
That's okay,
So I
but it
didn't
wasn't
remember to reach it out.
Raphael, so it
No.
doesn't matter. So Raphael Bostic, by the way, is what they call a Dovish member. So I don't know why. I should probably do some research, but
Hawks
they
and
have
Doves.
2 birds. What's that?
Hawks and Doves, right?
Yeah, Hawks and Doves. You're
Doves.
breaking up a little bit on me, by the way. I don't know if it's your end or mine.
Sorry. I'll be right
That's
back.
okay. I just want you to know in case we get some issues. So anyway, everybody, they have hawks and doves, and the doves are very peaceful, and the hawks kill things. I guess I don't know, but the hawks are more aggressive, and that's basically we have a hawkish Fed right now where they are raising rates, and that's kind of where they go with this. And Raphael Bostic is more of a dovish member, where he is usually less prone to raising rates, less aggressive in the Fed's trying to throttle the economy, basically. And he made some comments that the Fed would maybe reassess in September, because we know the Fed's going to raise rates in next week at their June meeting. They have a meeting in July. We already know the Fed is going to raise rates 0.5% at that meeting. They've made that very clear. And then it's September that we're actually forecasting. So I said everybody to bookmark about mortgage rates in the Fed. So mortgage rates are based on mortgage bonds. We've talked about that before, and I'll talk about it again. But for today, we'll keep it a little bit briefer, and we'll just kind of allude to that. So mortgage rates are based on mortgage bonds. Those mortgage bonds and the way they're traded, traders have already worked in and factored in these Fed rate increases and what we expect to have through the end of the year. And as they kind of get closer to each meeting and we know what that meeting is going to bring, that's why there's really no change when the Fed raises rates to mortgage rates. We factored that in months ago. But we're already looking at September and November meetings. So they're looking at these meetings in the future. And when Raphael Bostic makes a comment like, hey, we may not raise rates in September, we may hold back and see where things are, markets listen and they go, whoa, okay, that's a big deal. In fact, it was such a big deal that he had to come out and kind of clean up and clarify those comments. And he said, well, I kind of said that, but that's not really what I meant. I said what I meant, and I meant what I said. No, that's the Horton. That's not it. No, he didn't mean any of it. And actually, that was the whole point. Is he actually did come out and say, "Hey, that's not really where I was going with that. I was just saying that it was an." But even those little comments, they have the ability to move markets. So, but I want to talk about what you want to talk about. Let's talk about rates real quick and get that out of the way. So, mortgage rates have gone up a little bit over the last couple of weeks. Not a lot. Generally, you may find, depending lender to lender, could be about 0.25%. And again, this is something that you should take a little bit for education, but somewhat with a grain of salt, because rates will vary based on the lender you're working with, but we can give you kind of an overview. So mortgage rates have moved about 0.25% higher and kind of right within the middle of our range, if you will. And when I say our range, we at the beginning of the year started out with rates that were much lower, in the 2s or into the 3s, and they worked their way into the 5s. Now you may see a rate in the 4s, maybe in the 5s. It depends on if you're getting a VA mortgage or a conventional mortgage or an FHA mortgage. It depends on your credit score and depends on the lender's margins, which is why we tell you to shop around. And, let's just say that for now, let's use an average and say that rates were around 5%. And that could be lower than what you're being offered. It doesn't mean you're being cheated. Again, I'm just using it as an average, let's say a national average. So let's say that rates were around 5%. They'd be around 5.25% now on average. And that's because we've seen the markets kind of prepare for inflation. We've got some inflation data coming out on Friday. That could shake things up a little bit. And it's not the Fed's favorite gauge of inflation. That came out a week ago, but it is a secondary gauge of inflation. And if it shows inflation is still a problem, markets are concerned about that. Inflation is a big, big issue, not just for all of us paying the price, whether it's at the grocery store or the pump or any of the goods that we buy, but it's also the reason the Fed is raising rates. They're trying to get inflation back in check. And that's why the Fed will raise that policy rate, the Fed funds rate, this month and again next month. And again, it's not going to hurt your mortgage rates. Not directly and not right now, because we've already factored it in. And when we saw rates go up at the beginning of the year, that's why, because all the markets and the investors were expecting and pricing in this movement from the Fed. So This week, rates are pretty stable. We're right around that. We'll call, again, just an average. We're going to call it around 5.25. And we could see, when I say about a range, we could see rates move up maybe, let's say, to 5.5. and then could fall all the way back down to about 5. But they're going to be within that 0.5% range is what we're getting used to. And that's great because we have seen rates go from the 2s to the 3s to the 3.5s to the 4s to the 4.5s to the 5s. And we've seen this through the beginning of the year. And it was like, hey, I need to get my mortgage locked in now because rates are going up. You don't have to worry about that so much now. In fact, this is probably the peak for the near term. Again, somewhere we'll call it 5.5, right? That's probably the peak. And we would expect that sometime heading into 2023, we could see rates come back down again. So that's why you want to be buying a home now. You don't want to wait for rates to come down. You want to buy that home now because you can always refinance. And if you have a VA loan, you've got your best friend, Earl. Nathan, that's your cue.
Love Earl. Yep. Interest rate reduction refinance loan, right? You're going to drop your rate by 0.5 point. Low cost, low impact. Really easy to underwrite those. 100%.
Yeah.
VA
So
loan
it's
has a beautiful benefit there.
Yeah, it really is. So, and if for any reason you don't do a VA loan, there's other loans. You'll have other options that you may be able to refinance. So don't let that hold you up.
Right.
So that's it. The good news is things are stable. You don't have to worry too much. If you've got new construction or something that you're, going to be buying it and closing months from now, the good news is you may see rates similar to what we see today, maybe even a little bit better. If you're getting close to something, you're under contract, congratulations. Look to lock in based on guidance from your mortgage professional, but anytime now is okay. We may see things get a little bit better. My personal opinion, I think we could see things get a little bit better over the next couple of weeks if you want to hold off, but there is some risk to that. We could see things get worse. That's how the markets work. But I do think we have an opportunity to maybe get back down 0.8% or maybe even a full 0.25% in interest rate over the next few weeks. I think that is very likely and possible, if you will. So if you're the gambling type and you want to see about maybe optimizing that rate and you want to hold off a little bit, talk with your mortgage lender. Definitely for your scenario, get the best opinion because there's a lot of variables that come into play. But it could be something that could pay off a little bit for you and just save you a few bucks. But if not, and you lock in now, there's certainly take that risk, take that off the table and be done. There's no harm in that. And it's a good time to do that as well. So,
dude,
and what else
awesome.
did you want to touch on?
It's getting darker out here. Like I apparently have a storm rolling in from Oklahoma. Thanks, Oklahoma. So hopefully I won't lose any internet. Had some lightning strikes just out there a little bit. But what I was looking at was probability rate hike 100%. We just talked about that. That's awesome. But one of the things that we were talking about with the Fed is that they're looking at the affordability and the employment structure and the affordability for housing. And we were just talking about this in another discussion I was having today, is that some markets are starting to see houses sit a little longer or prices come down on their list price. Is that a sign of a bubble? And the answer is no. It's this sign of Adam Smith's, the direct correlation between supply and demand are balancing. You're coming to a fulcrum point of supply and demand based on affordability and income, right? So this is a key point to the whole thing. Don't get worried. However, look around. We are seeing, not that we're necessarily seeing more houses on the market, but we're seeing less competition for all the houses. So you're starting to get, not in the double-digit offer levels, maybe the high single digits. So take that into consideration. This is still a great time to buy. The interest rate you have today is the best interest rate you're going to have today. If you know what I mean, like you can't go backwards. You could sit there and wish that you did something 6 months ago or 8 months ago, but look, today's what we got. Tomorrow's what's coming. So hang tight and keep moving forward with confidence. Bet on yourself, and let's see what we can do.
Yeah, and definitely one thing about the home prices, those headlines can be very misleading. So they talk about listing prices are starting to come down and people are repricing. But if you don't understand how listing prices work, you may not understand why that isn't as big of a deal as it sounds. So what happens is, let's say that Nathan and I are neighbors, and Nathan sells his house for $400,000, and that closes, last week. And now I want to sell my house. The real estate agent will generally say, "Hey, Nathan's house sold for $400,000. We should sell yours for $380." No, they don't do that. What they do is they say, "We should sell yours for $420." And it kind of keeps working its way up because you're going to ask more until you hit that level of what the mall bear. So I may be all excited and be like, "I love 420. Let's go 420, 420, 420." And then maybe I'm not getting as much activity on my home. Maybe I'm not getting as many showings, or maybe I haven't gotten an offer in 37 minutes like we've seen so often in the last couple of years. So what'll happen is I go, okay, maybe 420 was a little too high. Let's go down to 410. And maybe I even end up at 400,000, which is where Nathan was. So the home prices are still stable. We're just not seeing that appreciation where every home sale is bringing up the next one and the next one and the next one. And we've seen double digit home appreciation, which is, it's unsustainable. And frankly, it's not healthy, because generally homes are going to go up about 4% a year on average. We've seen 19% on average the last 2 years. So that's a much, much higher. And it's great when you own a home, it helps you to build equity. Are we going to lose all of that? No, there'll be some homes that will lose a little bit. Don't get me wrong. But overall, there's still a huge demand. We've talked about this many times. Not enough houses being built the last 10 years. There's still a lot of people that are entering into the housing market. Millennials, I think they're a bigger generation even than baby boomers. Baby boomers not leaving their home, not dying off, not to be crass, but that has a lot to do with it. Our generations are living longer, holding on to and retaining properties. So there's less coming onto the market to begin with. We're not having that normal rollover in inventory. So that's all factors. It's still a great time to buy. My daughter and son and future son-in-law, they're looking at buying a home in the next, 6 months or so. And I am fully supportive of it. I think it's a great idea to buy a home right now. That's it, my man. What do you think? You're muted. I hear you.
You got me. Okay. That's silly. You're muted. It's the best thing ever in this day and age of these video chats all the time. It's like, you're muted. Hey, so I was just saying, thank you for making time today. And if anybody's watching this in replay, we do monitor these channels. So do leave your questions, comments. We're happy to engage and discuss. Or if you got questions for the next call, which we're not going to be on next week, we're
that one's my fault. I'm going on vacation.
That's okay. I mean, everybody needs. You know what they say: if you want business to pick up, schedule your vacation. And and that's how that works, because then you get super busy trying to get time off.
That's why when you said about it being quiet, I said not for me.
Yeah, not now. All right, man. Thank you so much. Have a great one, everybody.
Take care, everybody.